Welcome to the I Nurture videos.
Hello students. We know that cash flows in an entity are from three types of activities, mainly operating activities, investing activities, and financing activities. Let us understand the nature of these three activities. Operating activities are the main revenue producing activities of an entity. Examples of operating activities include sale of goods and services, production of goods and services, repairs and maintenance of facilities, etc. Investing activities are the activities concerned with acquisition and disposal of long-term assets and other investments. Example of investing activities include purchase of fixed assets, sale of fixed assets, purchase of long-term investments, sale of long-term investments, etc. Financing activities are the activities that lead to changes in the size and composition of the owner's capital and borrowings of the enterprise. Examples of financing activities include issue of equity shares, issue of preference shares, raising of loans, repayment of loans, etc. Now let us see examples of cash flows from these three activities. Hope you would recall that the cash that comes in is called as cash inflow and the one that goes out is called as cash outflow. Examples of cash inflows from operating activities are collection of cash from customers for sale of goods or rendering of services, collection of cash from other income such as commissions, royalties, and fees, refund of cash towards income taxes. Examples of cash outflows from operating activities are payment of cash to vendors against supply of goods or services, payment of cash to or on behalf of employees of the entity, and payment of cash towards income taxes. Examples of cash inflows from investing activities are amount realized from disposal of property, plant and equipment and other such fixed assets, receipt of cash from sale of debt instruments of other firms, amount received from sale of equity instruments of other firms, interest and dividend received from investments. Examples of cash outflow from investing activities are amount paid for acquisition of property, plant and equipment and other such fixed assets, amount paid for purchase of debt instruments of other firms, payments for purchase of equity instruments of other firms, disposal of maturities of investments, and purchase and sales of long-term assets and other investments. Examples of cash inflows from financing activities are amount received from issue of shares, amounts raised by issue of debt, amounts received from employees exercising stock options. Examples of cash outflow from financing activities are amount paid for buyback of shares, repayment of debt or borrowings, payment of dividends to shareholders, and payment of interest on loans. Did you note something in the examples of investing and financing activities? Interest and dividend received are classified as cash flows from investing activities. Why? Because these are cash flows arising out of long-term investments, which by nature is an investing activity. Similarly, payment of dividends and interest has been classified as cash flows from financing activities. Why? Because these are cash flows from fundraising activities that by nature is a financing activity. Please note that cash flows that cannot be classified as cash flows from investing or financing activities are additionally classified as cash flows from operating activities. Having discussed the nature of the different types of cash flows, let us see the methods that are used for computing cash flows from these activities. Now let us understand what is direct and indirect method. In the direct method, we take all the major items of receipts and payments as they have happened, that is, on a gross basis, and find out the change in cash. In case of indirect method, we take the net profit as the starting point and adjust the net profit for effects of three things. A. Transaction of non-cash nature. B. any deferrals or accruals pertaining to past or future periods, and C for non-operating cash flows. In practice generally, the indirect method is followed for ascertaining cash flows from operating activities. So students, to summarize, in this video we learnt about nature of three types of activities, mainly operating activities, investing activities, and financing activities. We also looked at examples of cash flows from these three activities. Trust you found this information useful.